Hey traders, Raghee here, and one of the things that we like to do when we are looking at the index futures is look at the names within the futures contracts, and that doesn't necessarily mean looking at the individual stocks, for example, within the QQQ, right, which would be reflective of what we're looking at in the NASDAQ, but sometimes we'll take it from the sector level. So clearly with the strength we've seen in the NASDAQ, the top 11 heaviest weighted names are all heading higher in what I call a double green market. So the 8 is above the 13 is above the 21, and price action is above the 34 EMA high, close, and low. And that's what those flags tell us. So one way to then take another crack at it, if you will, is look at the particular sectors within the NASDAQ. So that, of course, is tech, but also communications and discretionary. And then as we get opportunities to play not only pullbacks in the sectors, we can actually look to play pullbacks in those individual stocks. And this, to me, is very much in line with what I would look at in terms of being related to being a futures trader. So one example that we talked about today, and I'm going to walk you through the setup, is Dollar General. Dollar General in the NASDAQ rug? Think about it this way. NQ, then the discretionary ETF, heavily weighted sector, then to a top 10, top 11 in this case, weighted name in Dollar General, and a pullback buy to the 34 EMA on the high. Okay. These are the kinds of things, like this is what I mean when I say you crack open the index. Let's take a look at, for example, the XLC. Now, we've been bullish XLC, XLY, and tech for coming up on a month now. And once again, what we'll look at are those opportunities to pull back into key levels if the market is, again, what is the criteria? 8 above the 13, 13 above the 21. Those are exponential moving averages. And price action above the 34 EMA high-low close. EA was an example from XLC. We've pulled back before. This is my second buy in EA. Not my favorite, but definitely one that I have been getting long in. And then when you look again, what you want to see are those names that are coming back and giving you an opportunity. Now, is ATVI buyable? It is, but it's double yellow. Is Netflix buyable? I'm not going to prioritize ATVI or NFLX. But what about something like Google? All right, if Google pulls back to the 21 exponential moving average, I'm game. Right, so that's the kind of thing we're looking at. What about Goog? Same idea, right? A lot of folks have been asking about what about pullbacks and entries on Facebook? Same idea. And we can go about doing this in the other indices and their heavily weighted stocks. So what we'll do in the premium video is crack open the S&P, crack open the Dow, and do the same thing. And this is something that's important to index futures traders, because where these stock and sectors go is largely where the index itself, the futures contract, is going to go. But we can also sort of reverse it and look at the exposure we have to specific stock names and sectors, and not just the heavily weighted stocks within the NASDAQ, S&P, and Dow futures, but the sectors and the stocks heavily weighted within those ETF sectors. So this is an example of that. I hope it helps. Again, it's a really good way to understand where the opportunity might be on a much more granular level as you're looking at these futures contracts. I'll see you in the next update.